All right, let's get into this thing. Welcome to Everything Is... Yeah, at some point. I don't know. Yeah? Yeah, all right. Welcome to Everything is Fintech. My name's Anderson Pettet, VP of Fintech Strategy here at Money 2020. This is the part where I always feel most awkward because I have to kind of look at the camera, kind of look at the Ian, kind of look at the guests. We did that. We know what show it is. Here we are. Welcome, team. Ian, who are you? And then we'll do some intros on this side.
Sure. I am the EU Head of Content at Money 2020. I'm also looking at I don't know which camera I'm looking at, but hey, it is good to be here.
We're being trained.
Hi.
We'll get there.
Bear with us. I think that one, hey, people down that camera, less so you guys. Hey, good to be here.
There you go. Mary, who are you?
Awesome. Now I have the weird camera thing as well.
We're all overthinking it. It's what we're going to do is overthink
exactly.
it.
They register at the microphone.
Just look down.
Mary Agbesanwa, I'm really passionate about technology and how it's impacting financial services, but particularly wealth management, and also passionate about helping people achieve their full potential. I currently work at Embark, which is part of Lloyds Banking Group and offers white label wealth management services. And yeah, excited to get involved in our discussion today.
Woo! Who are you?
Well, I wasn't expecting that. I'm not even going to look at the camera. I'm Emma Napier. I'm the consulting director at NextWealth, and I'm pretty passionate, actually, about financial services in general. Tech including tech, but just I'm quite excited that this format seems really groovy, actually, and exciting. So
the beauty of it, this is the one of the few shows in the world of fintech, in the world of business, where we don't even know what's coming next. And that's the beauty of it. It's an excuse for us not to prep, but we like to think of it as serendipity, right? We like to think of it as creativity.
I love it.
So wealth management, wealth tech, it's a thing that Ian talks about a lot, but it's a thing that I would say the industry, the like fintech nerderati are not always leaning into wealth tech, leaning into wealth management. And for some reason, it's not the sexiest thing, it seems like, amongst the fintech nerderati, and that's a term that apparently I'm going to go with. So, Ian, give us a little bit of like your background, your perspective as to why this is something that you never shut up about when we're in the room together.
Yeah.
And then we'll get into like how do we make this a little sexier?
Yeah, so I don't shut up about it because I can't read social cues. Basically, that's ultimately the main reason why. But my background is that I worked at a company called Citywire, which covers the whole wealth management and financial advice market in the UK. And I had an unusual job, which was to travel around having coffee and beers with people, in that sector. So a few years ago, Emma and Mary were both on a podcast I used to host, where I turned up in a suit and I ironed my shirt, and there was a list of questions, and it was very wealth management-y. But I like to think...
I did not know that. I didn't know this was like full circle.
Yeah.
Okay. We go back.
So when I slapped you and I was like, let's do something on wealth management, you were like, I know exactly.
Yeah, 100%. Yeah, I mean, they didn't recognize me without the tie, but we got there.
You're like, who's the guy in the t-shirt?
Yeah, that could be anyone that looks exactly like me. So anyway, I started writing about wealth tech when I was at that company because you meet these wonderful people. I actually do have a lot of love and time for that profession, but the technology seems outdated. You'd read things about how 1 or 2% of financial advisors were using Excel spreadsheets as a back office system, and then you open up this world of technology. We're talking about AI, we're talking about quantum computing at Money 2020. We're talking about blockchain, digital assets, all that kind of stuff. You take that back to the world of provincial financial advice or even old-fashioned wealth management, those conversations are happening in some quarters, but they're not happening across the board. So my take on coming to Money 2020 was I was looking forward to seeing a lot of people that I'd met in my previous role, but actually at the show, like wealth tech was just not there. I think wealth tech's about to be there. I think we're a year or two away. And hence why I think we've got to have this conversation now, right? Because wealth management can't lag fintech like it has done. I think it has done because it's not the easiest thing to revolutionize, right? Yeah. You can transform payments relatively quickly to a point. Can you revolutionize people's personal finances, wealth, investments? I think it's trickier. And I think that's what we need to get into today, really. So, I mean, do you guys agree with like what I'm saying about the industry there? That it's a bit, I'm not trying to just slate your own industry. I'm kind of out of it. I can throw some punches here, but I mean, would you agree that it's a bit kind of outdated in parts?
Yeah, a little bit archaic, kind of backwards. I think between wealth management and insurance, it's like a competition for who's kind of the laggard in financial services.
who can stay on COBOL the longest? Who has a mainframe in the office for the longest?
Exactly, which is a shame. But I actually think a lot of the kind of lack of presence around wealth management and wealth tech at fintech conferences is because of people's own lack of understanding and people's the stigma around money and personal finance anyway. So if you're not deep in the space, you don't even want to broach the conversation because you're just like, okay, am I going to be exposed? Are we going to talk about terminology that I don't understand? And as someone that sells into the wealth management industry and speaks to maybe sometimes stakeholders that have their own journey with money, it's really hard because a big barrier can just be, okay, I don't even understand anything beyond like basic level of pensions. So how can I talk to my company about the next level of pension tech? So I think that is a big barrier in the industry as well.
I'm going to add that also with financial services in general, WealthTech, you're right, has made some sort of inroads with sort of financial advice. But I think there's a few things that we should talk about. I don't necessarily want to go down the regulation route right now, but I think that there is a massive sort of umbrella that hangs across wealth management in a way that particularly financial services and wealth management kind of just take the easy route and not progress as quickly as potentially they would do because regulation holds them back or is perceived to be holding them back. I'm not sure it actually is, but I think there's probably some bravery and some trust in some of that tech that maybe we need to get to.
That's very interesting because I would always think that embracing tech is a compliant thing to do. Like that's how you get ahead of the game. So which areas of tech is it that people are scared of?
Or is it truly the regulation thing? Like one of the
is that just
the reason I got into fintech was I did an internship at Merrill Lynch when I was in college. It made me so angry because I was just like this ability to have a fiduciary hat on for 1 minute and then a broker dealer hat on for the next minute. I was just like this. It's like I go to the doctor and you're just one moment you're going to give me actual advice that is good for me, and the next minute you're going to give me advice that's profitable for you. Yeah. How do I balance this as just an average person? To your point of the convolution and like the personal finance conversation, it's just it seems very easy to distrust and run away from, and it is convoluted. But like, what are those regulations?
Regulation is a big umbrella, but I think that, and especially recently, financial advisors have got a to-do list, and regulation is number one because they need to make sure they're compliant and they're doing everything right, and there's a lot of reviews and there's a lot of reporting that they need to do. So wealth tech is way down on the list. It's a kind of nice to have. Yes, I'd really like to speed up the process.
But that's so ironic. Like, to me, it is. In my brain, wealth tech is the thing that does everything you just said, right? Like, if you take a step back, you take 2 days, you implement a wealth tech solution, then all of that monthly settlement, all the compliance, like, if you're doing the reg tech side of it, right? Like, it saves all that time in my head.
Logically, yes. But
we're humans and we're not rational actors.
No, there's all of that. But there's also processes that you have to go through to make sure nothing falls down the gaps. Yeah. And also, I've spoken to a number of people, particularly around AI, where it's taken a year to not just embrace the process, but also to get everyone involved, sense check that with your clients, and then undo all of the steps and the challenges that didn't go right, and then put it all back together again. So it takes a lot. There's regulation that sits across, so it needs to make sure it happens properly. But also there's a cost involved in all of that because there's a kind of BAU situation that you could just go, well, we'll just do that in 6 months' time. So we'll just do that bit first, and we'll do it.
Or we'll just do that when other people have started doing it.
Yeah,
I was going to say, I run into this a lot. Like, how much do you just deal with inertia, especially in your conversations?
Yeah, I think it happens a lot. I think everyone's waiting for that first mover, and like not the first mover on podcasts talking about this thing, because everyone is on the podcast talking and acting like they're doing things. But I think people who are actually implementing the change, and I think, I think that inertia is quite embedded. It's like, let me blame regulation, or let me blame my processes, or I think the cost also is something that is really off-putting to a lot of firms.
The cost of implementing wealth tech?
Yeah.
But isn't the human cost like pretty damn high?
In what sense?
Like if you have 4 compliance, like in my head, if you have 4 compliance people, it costs you X amount. If you if you take a step back, take some time and implement a solution, maybe it's 2 compliance people or 1 compliance person with a co-pilot.
So I get that. I'm going to be devil's advocate here, aren't I? I can just see how this is going. No wonder we sat next to each other.
Yeah, exactly.
Right,
we were going to fight. We knew it.
So I do think that, but we have to remember about that human person as well. So not just about the delivery of financial advice needs sometimes to be a human. Sometimes there's a sense check in there as well. And it's really hard for some of these, as you said, Ian, the traditional kind of provincial financial services companies that have done it that way for years. Their clients are used to it as well. So that's another challenge. And whilst we all know that we've got, a shopping app and a banking app and a Deliveroo and all of those sorts of things, which all those clients are probably using as well, when it comes to money, to your point, Mary, it's a really hard shift for some. And sometimes it's a hard shift for the advisors themselves or those smaller traditional companies to just make that a priority when no one necessarily, their clients aren't screaming about it. And I just think it's a decision that you need to think about and roll out in different ways.
And I think people haven't necessarily figured out where to implement technology yet as well. Because I was speaking on a panel about 2 years ago about AI and financial advice, and this was early ChatGPT days. And I think the only use case that everyone was saying, we're going to do that was chatbots.
I knew you were going to say that.
Yeah. And that it's funny how that goes, because as you say, it's like it's a human-driven business. Those face-to-face interactions are so crucial. And I suppose when you look at what you're going to automate, you're probably in the same way that paralegals would be the thing that people think will go by the wayside. Perhaps it's things like power planners for financial advice. Perhaps it's things where the job goes from being, sifting through loads of papers to signing off on significantly more papers. But I think we're kind of figuring that out. And as you say, the customers probably don't necessarily want it, or at least don't know that they want it, because to them it's just, the value is almost at the counselling, like the value add for financial advice. I mean, these guys have become almost like help gurus.
It's emotional.
Yeah.
Especially retirement money feels especially emotional. Because, we were talking before the cameras came on, and I made a joke about maybe you should have 1% of, your allocation in Bitcoin or something like that, which I don't know. Again, not financial advice, which is what I said before the camera came on. And maybe there is a conversation around that. But if I'm thinking about my retirement money, my level of risk, the safety and soundness, like sprint, is a lot different in my mental state. Like, I feel like I'm just going to want to fly it to safety all the time. So I think I guess there's almost a separation here. Like, we're talking very general about wealth management, wealth tech, and I feel like there's a piece of it that is reserved for pre-retirement, and there's a piece of it that's reserved for post-retirement, right? Like, there's a certain type of human that even thinks about investing dollars that they might accrue before 59 and a half or whatever it is. And then there's this other group of people that like, oh, okay, it's going in my pension and maybe I'm not thinking about it. It's on autopilot. But I feel like those are two very different groups of people. Because like when I got into this industry, like I started at Merrill Lynch thinking this is where there's trillions of dollars here. And like, this is how people live a life. Like they retire and it's very important. And I realized, oh, well, nobody actually has any retirement funds because they don't have any savings. So I went and worked in banking. And then I realized, oh, nobody has any savings because they're all in debt and worked in banking as a service. And you just kind of keep going down this Maslow's hierarchy of like financial needs. And you kind of realize like there actually is really fascinating stuff happening in wealth management and wealth tech. But like the human animal is so scared about savings and debt that of course we kind of go that way a little bit. And it seems like it's a smaller addressable market. But if with these new technologies, it seems like there's a leveling of the playing field that could exist. I don't know, there's a lot of different directions, but it seems like the AI thing seems like the self-driving money, that whole side of things could level the playing field in a way where, even if I'm saving 25 cents a day, I'm saving, right? And that's the thing that isn't happening a lot right now.
Yeah, and that to that point, I worked at a company a few years ago, probably about 6-7 years ago now, called True Potential, and they did their own tech. So they always did everything quite different to sort of traditional wealth management. But so very early on, in my kind of terms, they sewed everything together. Mm-hmm. So all the processes together. But what they did was really clever was they linked the end client into that process really, really early. So they said, we'll correspond with you through secure messaging, and this is how it works. You'll have an app on your phone. If you want to talk to us, you can do it. And it just really, really worked. And then they did really well with it. But the bit that made a difference was the sort of nudges. So to your point about, kind of newer, at what point do you engage that end client for some sort of financial advice, and when you don't? So what they did was they had these, I can't even remember what it was called, but they had this sort of mechanism to sort of give a nudge to say, they'd integrated your bank account and things like that. But did you know you spent, 50 quid in Starbucks this week? Had you have put that in your ISA by these 3 buttons, you'd have been able to pay your mortgage off half a day early or something like, and it was just, and so I'm not saying everyone did that, but it just was a different mindset for financial advice back then. And I just think that potentially to reach those people that you're talking about that aren't the 59 and a half, at what point do you talk about Starbucks, and at what point do you say, use this piece of technology because it goes off here, it's linked to your financial circumstances or your financial health, and it will just give you a little whizzy thing to look at. And possibly that's where WealthTech could help. Exactly. And it's got to be relatable.
Exactly. And I think it's about making the kind of what people see as wealth management, like this long-term vision, a bit more like gamified and kind of short-term for people to understand.
Totally.
And I found something really interesting when I've been working with all these like WealthTech apps, that the biggest drop-off they find in the customer journey is when they have to ask people for their national insurance number. And people are like...
Is that like a social security number?
Exactly.
Okay.
And people
I'm
are
translating, everyone. You're welcome, American listeners. You're welcome.
And people are just like, why do I need to give this information? I only give this to like an employer or something. And it's just, I think to me, that's really interesting because it just signifies the kind of lack of understanding, and obviously it's because
trust,
you
too.
might, and trust. And how do we think about the whole kind of customer journey? And as you're thinking about like the end customer when designing processes, I think the WealthTechs that I've seen do really well are thinking about that really clearly and thinking about every step and when do you ask certain questions as well.
Yeah. And actually, the customer journey is a really key thing to look at, because there's 2 types of ways of looking at this. One is the financial advice and wealth route, where someone is authorized to act on your behalf and is looking out for your best interest and has to do that, versus a self-directed journey. And actually, people can probably do themselves as much harm as good. When people do, if you've seen Wall Street bets and things like that on Reddit, my goodness, some of the incredible losses people manage to achieve there. Yeah, so it's one of those things as well, isn't it? There's a right amount of power to give to a client if they're part of a regulated advice or wealth business. Because, we all get this. I remember telling my friends what I did. I'd say I speak to the leading investors and financial advisors in the UK.
I'm going to get you a shirt that says that.
Yeah.
I bet your friends were well impressed.
They were like, thanks, Ian. Like, that's nice. I'm not available next month.
Exactly.
This has been lovely.
Unfollow.
But the questions that you get, right, the questions are never like what you would expect. Like, what shall I invest in? They want you to tell them a stock. And they usually want it to be something kind of hot and exciting and buzzy.
Jim Cramer's ruined the world.
Yeah.
Totally.
Yeah, I could have done that. I could have given bad stock advice. It could have been me, but
exactly.
Sadly not. But I think there is that point when you're devising. These user journeys, nudges are good because then there's kind of a guidance there, rather than have you thought about buying Trump coin or something like that.
Oh God. Well, I won't say Voldemort, but do people believe this coming from an American perspective? I have an opinion that the average, very average, which is overgeneralizing, American doesn't totally believe that they can become wealthy in their lifetime. Like, the American dream is still a thing to some degree, but I think there's a shift, and there has been a shift in the U.S., especially over the last 4 years, where the belief of that upward mobility and the belief that the financial system could work in their favor, as if I'm not an average person, I'm saying they, is not there in the same way culturally that I think it was in years past.
Interesting.
Do you feel that in the UK? Do you think that's like, have you had that? Am I the only person feeling this? I might just be nuts.
I'm really thinking about it.
I know you are.
Yeah, it's my thinking phase. I actually agree. I'm just more shocked that I didn't think America was going through the same transition, but I do think the UK is similar. I think people have this feeling of not believing that they can move across, I guess, social classes as easily.
Right.
And I guess a lot of people looking to places like Dubai or where they can earn tax-free for a bit and then come back, and just thinking about other ways to accumulate wealth, and the UK maybe not being that place where they can be in that part of their journey where they want to, because things are really expensive, particularly in London. So
it's also I think we all know Mickey, and I was having a conversation with his best friend last night, and he Googled it, and we'll find the exact stat later, but the number of people in the UK, and especially I think he just looked up England, that make six figures is like wildly low. I mean, it was like sub 10%. It was sub 5%. I want to say it was 1%, but I don't want to go that crazy. So that too, like that plus that makes it seem like, plus the rain, how do you do anything? Like it just seems like a really hard an upward track, because how do you save? Because rent here is just as expensive as it is in New York from what I see. It's hard. Sorry to take it down there. That's the energy just got real good.
Brilliant. Yeah. Oh dear, where's my umbrella for in here?
I made it rain inside. I'm sorry.
I mean, present company accepted in terms of banks, but I think there was a big shift in that trust, and even asking a question about wealth or whatever, when the banks all retreated in the UK from being able to give financial advice, or even that, to your point, Ian, about that sort of robo journey. At what stages can I go through on my phone or with my bank? Because I trust my bank, because well, my money's with them. Might be a lot, but my money's with them. And I do think that there was a shift in that sort of the average person just saying, well, financial advisors, people that go to financial advisors for rich people. So therefore, I'm never going to go into that. So I'll just, save a little bit under the bed, or I'll just cut back on my shopping every week or whatever. And that's how they're managing it. Yeah. And I think that's why we're in this kind of state of the industry, the financial services industry, trying to reignite, whether it's through WealthTech being able to break that mold or not. But we're in this kind of, I think we did some, I told you I'm rubbish at stats, but the potential of customers that are looking for financial advice is huge compared to those that get it. And we're going backwards, not forwards, because costs are going up, financial advice fees are going up because the regulation is causing that to happen, and all sorts of things. So at what point does someone invest in the tech, swallow the cost, be happy about the regulation, but be able to create something that delivers something that the banks used to do? Present company accepted, because but it's that trust thing, I think, as well. I don't know what you think, Mary, because
I definitely agree. I think it's also about, as you're talking, I was thinking about how do we meet people at their point of need, and do people really understand their point of need anymore? Because when it was just there as part of the bank offering, it was like, okay, this makes sense. This is where I speak about my finances. So I think, do people still have that good understanding of what are the moments that matter, that I need to think about my kind of wealth management journey? Because we've taken some of that away, do people just default to saving under the mattress, or just in being a low interest rate current account? Is really interesting to think about as well. And I think that could be why. I think a lot of people might just be unaware and not have the time or the capacity to think about their wealth management needs, and then have already kind of opted themselves out by thinking it's just not for people like me.
If you can't even stick money in that mattress, you're probably doing pretty well, right? The average person's going paycheck to paycheck, and thinking about some of the things we're talking about, and that's again kind of like my journey started there and went this other direction, because we all want to get people here. right? Like if we could actually solve this debt problem, solve the payments things, get people to actually think about what we're talking about. But I do think, as we keep coming back to, the human is a big piece of it. Do you guys have personal finance education in school as a standard thing? Because we don't, and it's a big part of why we have a problem.
Yeah, I think there's some lobbying for it to happen, but it's not standardized. And then you have the problem that like the teachers might not be well informed, so they might not want to do it as well. And then, it's not great.
Teaching money is hard, and the idea of like growing up and going through college without understanding the time value of money and like the idea of compound interest, like if you don't understand compound interest, like you're probably not going too far out of your way to invest.
That's a point though, Zach, because you just said compound interest, but I wonder how many people would just go, oh, I don't even know what that compound even that word means.
Exactly.
Let alone. So we've got to find a different language. Yeah. And we've got to appeal.
Yeah. Well, your nudges thing was a great example, right?
Or just, again, the point that you made about getting to 59 and a half, that's really kind of in my head, because even if at 30 or 40, you just said, well, here's some ideas. You may not want to go down that route. It might not be right for you, but just here's something you should know. At 59, at least you knew it and you made a decision either way. Yeah. Whereas I think, to your point, you're getting to 59 and a half and you're in a situation that you've got kind of less choice. And if we could create something like that just through tech, nudges, information, then people have choice and they can either ask a question and they could, even if it's blooming chat GPT to say, all that compound interest stuff, tell me what that is in like a child's that sort of stuff.
I think creating the analogy.
I think visualizing that's important as well, because when you're talking about the initial early years of investing, you're talking about small percentages. People have been triggered to use wealth apps by things like GameStop, or again by crypto, because you're looking at the economy we're talking about, where people are worried they'll never retire, they won't afford a house, that kind of stuff. People are kind of desperate, so I think you almost need to visualize that long-term piece. Like, compound interest sounds boring, but this is like
a line that goes up to $2 million though looks great, right? Exactly. Yeah, that's a lot sexier than like, let's talk about Warren Buffett terms.
Yeah,
right?
Exactly. I just think people switch off with the words that we use. But if you said, don't worry about the term, but if you understand the concept of compound interest, you might be able to buy that car, or you might be able to buy that house a little bit sooner. That's all it is. And then,
I think I still feel motivated because I feel like, at least when I look to like Gen Z, they are interested. They might be enticed by like the crypto of it all, but I think it gets them in.
Right.
And I think I saw like finance is like the second most popular topic on TikTok. So, which is scary. Like I literally saw a video of someone telling young women to like not pay into their pension, which was awful. And I commented on it. I was like, yeah, guys,
no,
don't do this. But I think there were so many comments. It had like 30,000 views. And I was like, this shows that people are kind of intrigued about this thing. So how do you capture all of that intrigue and that awareness, and maybe people recognizing what they're doing isn't working, and strip out all of the jargon and the terminology and deliver something that people want? And I think I've worked with a few of the kind of like edtech apps that are coming into personal finance, like Your Juno, like Female Invest, that are all about kind of particularly focusing on women and the gender investment gap, and saying, actually, we're going to make this really simple. We're going to just think about what you want as your means to an end with money, and we're just going to educate you, and we're not going to do any execution. We won't even tell you where to actually invest, but we'll just help you understand the key terminology. And actually the vibe and the energy on the webinars and the content around Female Invest and those apps are really good, because people aren't thinking about, I need to invest today, or they're using like dummy accounts, or they're using fake money, and they just can build their confidence so that they can then take that leap, which I think is a big thing for a lot of people.
I hope that groups like that start thinking about the embedded finance opportunity, right? Because coming back to the trust thing, like if you have whatever critical mass of users that you've developed trust with, and they're actually logging in, joining, if somebody is joining a webinar and you're not managing their money, that's crazy to me. So the idea that they're like slot an account in there, like, something along those lines. And it feels like we're on the verge and I'm curious what you all think of this, the ability to sign a power of attorney plus the fact that AI is moving the direction it's moving feels like there's an inversion that could happen, and it may happen slower in wealth tech than it's going to happen, across the rest of the industry. But it seems like we're close to having a co-pilot for just an average person that's, dealing with their money, right? Like, imagine if you could have a responsibility layer on top of Robinhood that made it so that you didn't trade futures into the worst situation that you could ever be in as somebody that doesn't understand futures, which is a whole separate thing. But if we had a layer on top of that was like, no, that's the stupidest thing ever, or, we would rate this as very risky, 99% chance of loss, or, whatever it is, like something like that, I think it gets people... It just increases confidence, and if the trust is already there with an organization like that, like it feels like they could become a $100 billion company if they think about it correctly. You know, like the trust it seems like the seed of it all.
Yes, I definitely agree.
I think you're right. The trust is the seed of it all. But negative Nancy over here.
Let's go, negative Nancy.
I do think that going back to original, the regulation stops that a bit, because traditional financial advisors that could implement some of that regulatory tech could have some sort of parameters around it to highlight red flags and, don't do this. People like you have done that. But there's a lot of paranoid people around that's going to go to the financial ombudsman, which, they're going to get a claim against them because I followed your advice, even though it wasn't advice, and you said people like you. And that sort of, so
that's
it's nervousness from the industry as well, because, maybe it's crossing just too much of a line. And that's where regulation, I think, is...
What we might be saying is that this isn't going to happen in the UK first because of that. Another thing as well is the cost of this, because when the robo-advice proposition started rolling out years ago, the kind of headline stat was that the cost of onboarding a client was 4 times the annual revenue from that client. And then you're assuming that client's going to stay for 4 years or do anything meaningful with the money. So is that still the case? I mean, I've not followed this as closely in recent years. Is it actually profitable to service all these people that we're saying we need to bring into the system?
Oh, you're looking at me, aren't you?
I have. I look at Mary as well.
I have an opinion. I don't know. I don't know for sure. But from what I have seen, I think that people are testing that environment. And I think that the proposition is moving towards things like behavioural coaching and not just out and out advice, go into this fund, go into this tax wrapper, and you'll stay there and you'll be fine. Thank you very much. Because I think what they're doing, or propositionally, people are thinking about, vulnerabilities and just coaching advice rather than other areas of just out and out, kind of go into this. Here's just 5 steps that you need to go through and off you go. And I think that's where maybe the nudges, I'm using nudges a lot. I don't even know what blooming nudges are. But
it's actually a behavioral finance book, I think, though. So,
nudge,
yeah. So it's that sort of stuff that I think could potentially change that, where robo maybe didn't work. Coupled with the regulation side of things and the trust side of things, I think if you had a blank piece of paper, then you could take a lot from what's happened over the last 3 to 5 years and write the story again. And I don't know whether we've not got enough time or we want to, but there's also a point to note about and get a move on, because it's not going to wait for another 3 years before you work it all out.
Yeah, so, and arguably it's not about being as holistic as doing everything, right? I mean, we talked about pensions. I think pensions are a really interesting market in the UK because people get automatically put into a default fund, which if you're under the age of probably 45 is not the right fund to be in. So you immediately get...
But
in the US, you don't even get that. In the US, like if you have to opt into your 401k, and then you have to decide the amount of money percentage-wise that you want to put in your 401k. And then from there, you have to pick the funds. There was one robo-advisor for 401ks that existed to robo-advise across any institution. I was the second employee there. It got sold to Morgan Stanley, and it's gone. So now we have like For Us All and things like that in the U.S. where it's it's kind of like your world where it's vertically integrated. You sell it as an employee benefit, and then it's the robo-advice management on your 401k, but it's vertically integrated. It can't just travel around, right? So like, no, that's not great that the pension's not invested exactly correctly, but also y'all don't have to opt in. You don't have to make any decisions. And it ends up being that people are investing, they invest their 4% because they get their match from their employer. And then they literally just leave it in a money market fund because they don't understand that they need to invest it. And they've lost out on hundreds of thousands, if not millions of dollars by the time they retire. Not that I'm passionate about this, but it's crazy. Sorry.
But basically that. I mean, you get people from the offset given a pretty poor solution. Auto-enrolling people in a pension is a really smart thing to do. But then they miss out on a lot of that benefit. And again, if we talk about visuals, graphs, letting people see what's going on, if you could actually visualize the benefit of putting someone in it's still a very sensible, probably tracker fund of some sort, but with a more adventurous outlook. Christ, this is sexy,
Just
isn't it?
S&P
This is
500
This is really good.
Yeah.
But it would really help people's financial situation. And that's the kind of basic things we should start with before going. I'm saying the whole holistic piece of doing everyone's like whole financial affairs probably isn't feasible right now. But
think about, sorry, Mary, I'm going to shut up in a minute, honestly.
So many ideas.
Yeah, exactly. But to that point, if somebody did that and they had a choice of, maybe I'll go into that default fund, or maybe I could go into a tracker fund. But it's my decision. I've read a bit. I've put it into ChatGPT. That's told me kind of in my head what it is. They could go and do that. But then when you think, but when they're buying a house or they get married or the kid leaves school or whatever it is, they're likely to go back to that proposition and do something else. And that's the key as well, because the retention and the trust needs to...
And the engagement.
Exactly, and the engagement. Whereas I think in some respects, we've had a situation where it's like, I'll buy my ISA over here, but they're not having my pension because I don't trust them. And I think we've got to create a bit like that.
And also just like, I always change out of that default fund. And it's so hard to do. They don't make it easy for you. Like, you have to dig deep. And I'm someone that works in the industry, and I'm like, I'm just trying to find out what fund I'm invested in so that I can change. And I'm like, your average person is not going to do this. They're just not going to do this, which is a shame. And I think the industry can do better around that, around educating customers and trying to find, again, those moments that matter to bring them in. I think there's so much more to be done there.
I think we forget how intimidating this conversation is. We've been talking about how intimidating it is the whole time, but it's like a really, really, really scary thing to think about. I'm curious, to your point on the UK thing, and just listening to you talk, especially, Emma, it sounds like and I'm not that familiar with UK regulations around wealth management, but it sounds like you guys are a lot more regulated than we are, just based on what I'm hearing. Because I think like the regulations that exist in the US, one, won't exist for very long. Two, I don't think are holding back wealth managers from implementing new reg tech or implementing anything along those lines. And like, I think there is very much a line around this is financial advice, this is not, and like the, associations and, licenses therein. But it just, listening to you talk, it sounds like the barriers may be higher here in a way that I didn't understand. I'm
not sure they're higher. I think the UK was probably in that situation of this is advice, this is not, since when RDR came, in our world, RDR...
Is that 2012 or something like that? Yeah.
13, something like that.
Yeah.
And that kind of was okay for a while. But over the last 3 years, there's been some additional compliance regulation that has caused more work and more focus on the end consumer. So the focus is always about the end consumer, which is right, of course. But what that's done is a number of financial services firms or financial advice firms have had to backtrack and go and say, right, okay, well, the regulator now wants me to report on the income that I get. And did I actually deliver that advice in the first place? Now, it could be that they haven't got or they haven't implemented sort of detailed in-depth tech yet to be able to do that. So it's manual.
Yeah.
It's like kind of going through the filing cabinet and working out. And there's been some examples of large institutions that haven't got that quite right. And they've had to stick, kind of £500 million in the bank just in case those clients trot off to the ombudsman and there's a big claim. So all of that increased work because of regulation, those recent bits of regulation, I think is one of the barriers that financial advice firms, they've got to do their sort of housekeeping and get everything in order before they can go, well, I'm never going through that again. So I want a bit of tech that's going to tell me that I've done that and I can report on it and I can trust it and then I'll move forward.
Yeah.
But I don't think we're there yet.
No, I think the regulation had some unintended consequences. So, I joined the industry around that kind of RDR time, just as it was coming in. And from my perspective,
For the sake of the listeners,
the retail
what is
distribution
RDR?
review.
There we go.
There we go. More sexy acronyms for all to enjoy. Basically, it meant that financial advisors weren't making their money off commission-based investments and protection sales and things like that. I actually felt covering that industry, I was largely dealing with the good guys, honestly. Like the financial advice market in the UK has always felt like a fairly ethical place. And but what's happened, of course, is the market now is serving people that are already very wealthy, or at least kind of upper middle class and doing pretty well. And that has left a huge gap. They call it the advice gap. I'm sure you have similar things in America and elsewhere. So the regulation kind of worked in the sense that I think it's a nicer industry in some respects, but it also completely left this chasm of unmet opportunity and unmet kind of financial demand, which I think, technology ultimately, I think will start to fill that gap. But when?
Yeah.
That's the kind of question.
It also sounds it sounds like maybe what I was reading into is more cultural, not regulatory, because I think like one of the ombudsman example, right? If you feel taken advantage of and have misgivings about your financial advice over here, sounds like you go to the ombudsman, which as an American is hard to say. In the US, if you feel that's kind of just a Tuesday, right? Like that's if you get financial advice and your thing ends up going to zero, that's you. Welcome to America. Like honestly, that's kind of how we look at it on average. And if you are in that situation, you're like, maybe next time the penny stock goes up, not down, whatever it is. And I think our mental, there are class action lawsuits there, that exists 100%, but it has to be pretty friggin' egregious for us to get to a point of getting legalities involved in us losing money because we're so used to being taken advantage of. And just look at the growth of I almost wonder if there is something to learn to both of your earlier points around the gamification, as much as I struggle with Robinhood, as much as I struggle with DraftKings and things like that, is there actually something to learn from that kind of gambling mentality? We say gamification, but at the end of the day, some of this, in terms of the mental state and making it shorter term, if you could just make people feel like they're winning, right? Like a week out and then another week and feel like that's really stacking and then in their brain, they're getting something out of it that is more significant dopamine-wise than 40 years from now, I'm going to be okay. Anyway, it just seems like there's something there, and I think Americans just are different in terms of the way we think about this. We're just very used to losing money to large institutions, and that's a pretty normal thing.
Wow. That is a big thing to unpack. But definitely around the gamification piece and just insights generally, I think that could be a big game changer for wealth management. I think even if you look at the kind of Spotify Wrapped and that banks trying to do a banking Wrapped and this is how much you spent here and that kind of thing. Yeah. That is kind of I see that as a way to give people insights and engage them. And if you could do similar things around people's portfolios, how interesting could that be? But the issue then comes to do you have your ducks in a row to give that information and will it be accurate so that the customer's this is insightful, not scary. But I definitely think it's finding these ways to engage people. Because I think there's a really interesting report from the consulting firm BCG, and it talks about for every 100 people that download a WealthTech investing app, only 7 people actually create an account.
Sounds right.
And then only 2 people
Fund it.
actually invest. And then only one of them is a repeat investor. So that's even just the people that are downloading. Imagine how much work you have to do to even get people to download. People have fatigue. When I speak to people, there's like 20 different options of like investing apps on the tube. They're like, I don't even know what makes them different anymore. So it's an interesting space.
You have to do research for someone else to do the work for you. Like to pick a good robo-advisor, you're like trying to outsource it, but you still have to do work to outsource it.
Yeah.
And of course, there's a big business over here that wants it to go wrong as well, because they're saying, oh yeah, put a claim in, because, we'll do it all for you. And we'll take a few quid, when you get your 100 quid back.
That's
so
really
there's
a
a
thing?
big business. Yes,
That is just that, as an American, I'm like, wait, what? Like that it makes a lot of sense, I guess. And like we have the CFPB, right, the Consumer Financial Protection Bureau. That's probably the closest thing we have to what we're talking about. And I mean, I don't think that Chopra's done a ton on wealth management. Like, I mean, there's been more like, embedded finance and like banking fines that are directed towards, deposit accounts, things along those lines. They're like airline miles, whatever it is. But I need to actually research this at some point, but I don't think that there's been much on that side of things. Like, I think we just kind of let people, and also, I mean, this is a larger question that I don't think we have time to unpack, but as the election unfolded in the U.S., right, like we have already started to roll back regulation. We're going to roll back every bit of banking regulation, it seems like, that has existed since 2008. Like the likelihood that we absolutely, like our stock market and everything goes to the moon in the next 4 years seems very likely. The likelihood that we have an incredible financial crash there very soon after also seems very likely. So it's this weird thing where like the US is going to completely be irrational and go mega growth mode. You guys are probably going to stay rational, and like the whole European Union is probably going to stay rational for the most part. And it's going to be interesting to see how this competition, we've been talking about this during the bunker days, it's going to be interesting to see how that competition happens. Like we're going to go truly Wild West, and like people that you thought were very serious financial institution types are going to be like, yeah, Bitcoin, right? All of a sudden, just because of the administration. And then you guys are still going to be responsible. Like, can you keep up when we're just idiots?
Yeah.
I don't know.
I mean, have you considered an ombudsman?
We can't pronounce it.
No, nor can
our public schooling system will not allow for it because it's too hard to spell.
That's absolutely hilarious.
I mean, I think there's a lot that we could learn from the UK. I just don't think we'll learn it. Or we'll learn it the hard way, and then we'll be very American about it and put back in the regulations that we took away after, and then we'll go back in circles, right? I mean, that's the fun of the market.
I feel like I've been kind of negative, as I say, about the regulation, but I think it's a reality. But I actually do think it's a really good thing, because in any business, it doesn't matter who it is, if you always think about your customer, then that's a good thing. That's a really good thing. And just on that point about whether America goes balmy or not, I think we are just in a period of settlement in the UK, but there's so much opportunity, whether it's wealth tech, whether it's nudges, whether it's direct to consumer, as long as you focus on the end consumer, because they're all telling us they need financial advice, and doing it the right way with the right language, someone will, at some point that's going to go mad and it's going to take off and it's going to grow. And maybe other jurisdictions will just go, that works. And just learn from that.
Well,
Hopefully.
I'd love to go back to Mary's point though about the amount of people that download a WealthTech app versus how many actually invest money in it, because embedded finance had a big boom globally, but that's kind of straightforward in some respects, right? I mean, if I'm using buy now pay later at checkout, I've got my incentive as well. I want to buy something. Okay, great. Here's where I can buy it. Click it. Done. Whereas you can't do that with WealthTech, because if you're getting to that point, there's a million and one things you've got to enter. And also, you've got to know that you want it. And the thing we're selling, if you're using buy now, pay later, you're usually trying to buy something and you know what it is. Yeah. What we're really selling in WealthTech is financial freedom. What we're really selling, perhaps, is the yacht you're buying, well, not a yacht, probably a car, in like 15, 20 years' time. Yeah. It's that house you're saving towards. So we've got to find ways to really map out what the opportunity really is. But there are just so many more hurdles to jump. I think it's doable, like you're saying. I think we can get there, but there's a reason why WealthTech has lagged. It's quite easy to make fun of, pinstripe suits and all the rest, but it's actually a technically much harder challenge, I think, to bring WealthTech to where payments are, for instance.
But even to that point of wealth, So someone thinking about wealth tech, again, it's language,
The
isn't
term,
it?
yeah.
So
Yeah.
the end consumer, like, I'm not wealthy.
Yeah,
Like, I just
exactly.
want to buy a car.
Yeah.
I don't care
Yeah.
whether it's an old banger
Yeah.
or whether
Yeah,
it's
they're like,
a
I don't know,
Ferrari.
is
It
poor
doesn't-
management a
Yeah.
thing? Like,
Exactly. Yeah. Exactly. So I think that the tech has got to match the environment, and the environment has got to match the reality of how we live every day.
Yeah.
It's just got to be. I mean, is it not just simple? Am I just being too simple about it?
I don't think so. I actually, do you want to be even more brain dead? I spent way too.
I'm
No, you won't be
sorry
brain
about
dead.
that.
Sorry, you won't be brain. Sorry, to be brain dead. Sorry, to build on that and become brain dead. My bad.
that was much more polite.
Yeah,
Well done. Good pivot.
Yeah. I won't last long at the embassy like this, will I? But
It's our next ombudsman.
yeah. My
was that? Say it
ombudsman. My ombudsman hopes are dashed. But
Yeah,
if you
it's
tell it
so
the
much.
the Web3 approach, right? Like, people say to the moon. You think about like
Yeah.
a pension. Oh yeah, get excited about your pension. Am I? No. To the moon, yeah. Like, oh yeah, save money so maybe you have a car. Am I bothered? Maybe not.
Yeah.
When Lambo, yeah, okay.
Yeah.
When Lambo excites me. So like, I think there is a point where actually
Yeah.
the language we're using is probably missing the mark.
Language and almost like a branding problem as well. Like, yeah, there's a lot to be done. I'm that awkward friend that is always trying to talk about pensions at dinners, and people are like, "No, this is not working."
I mean, you mocked me for this, and Mary gets a free pass.
Yes, thank you.
Yeah.
Mary's more fun.
Yeah.
But yeah, I think there's a lot to do around the wealth tech and wealth management branding problem, and why 3% of UK adults can invest in crypto in a pretty short amount of time, but only 15% of adults in the UK use an ISA, which is like crazy. It's like a
That is
tax
really
efficient
low.
way to invest. And I think if you explained it to them without the jargon, they would probably be like, okay, save for 5 to 10 years in something where it's kind of protected from a tax perspective. No brainer, 100%. But again, it's the language, it's the barriers, is this for me?
Yeah. Yeah.
And it's just like the human being, and like, I don't know, I like Nikes a lot, and I feel like maybe I want another pair of Jordans, not, I mean, like, I get no dopamine out of the idea of putting that $100 into this account, but like, I don't know, as soon as we figure out the dopamine problem, I feel like we did it. And that's why I keep going back to like, I have a lot of struggles with the idea of,
delayed gratification and dopamine don't really go hand in hand.
No,
Exactly.
they don't, but
Yeah.
they have to, or else we're not going to solve
Exactly.
this,
Yeah.
right? Yeah.
But then I think people are enticed by like the whole like fractionalized stocks, and particularly like US stocks. And if US stocks are about to boom, again, not financial advice,
Yeah.
then that might be interesting to see, because I feel like during the pandemic when that happened, everyone was like interested in US tech stocks and that kind of whole fractionalization piece, and people are really interested in that. So if that's about to happen again, how do companies then take advantage of that and also use that as a time to educate people about maybe less sexy but also other investment options as well?
It seems like there's so many pieces of it that can be really fun, and there's it feels like, I mean, if you have 100% of a portfolio and you're responsible with 90% of it, and you think about 10% of it as actually just a good time, like maybe that's a portion of the answer, right? Like one of my favorite ones is the on Twitter, it's the Pelosi tracker, and it does exactly what Nancy Pelosi does in terms of her trades, and it's up, quite up, and it's like things like that are so fun to think about, or inverse. We were talking about Jim Cramer earlier. Inverse Cramer literally does the opposite of what he says. It's up like crazy, right? Like, these things are really fun, and you can do trackers of all these different individuals out in the world. So like things like that, or thinking about, like, I don't know. I mean, I'm not going to pick a specific meme coin, but one was put out recently after an election, and like, whatever your political beliefs, like, do you put 0.01% into something really stupid? Like, I'm just knowing it's probably going to go away, but you're like, I'm being responsible here. I just want to have some fun and feel some joy. Like, I want to feel alive as part of my retirement account.
Hold on, I'm so American.
I don't know.
Alive? What's this alive you speak of?
What is
this?
What is this energy? What is this?
I'm most confused.
I must report you to the ombudsman.
The ombudsman will not be.
You have escalated beyond the amount of decibels allowed in this area.
We have regulation for that, Zach.
There you go.
Exactly.
I think we're supposed to wrap here, team. Any closing thoughts? Any things that pop in your head? Any things you're excited about for the future? Because I think we maybe went in some I went in some scary dystopian directions. So curious if there's anything that pops in your head that just really gets you going, makes you feel alive about the future financial management?
Well, I as I say, I'm also positive pants myself as well. So I might have
You're
some
negative Nancy, but also a positive pants.
Positive pants.
Gotcha.
And I
Balance.
always wear my positive pants. And the reason I do that is because I love what we do. And I just don't think we're there yet, which is why we get up in the morning and we go into our businesses. It doesn't matter if they're large or small or whatever they are, for the purpose of the future. And we add our values and our thoughts to things like this. To get the brain going and to think about what the future goes. We've got all the stats. We know where the market is. We know where potentially we need to head. We're in a period of settlement, which is a good thing. So it can only go up. Positive pants.
Positive pants.
So for me, I'm really positive. Definitely tech is ready to be plugged in, and but it's got to be right. And if we always focus on the end consumer, then that's a good thing as well for any business. So yeah, I'm really positive.
Thoughts, Mary?
I feel the same. I think last week I was at a fintech conference focused on kind of young people, students and early career professionals that want to get into fintech. And it was focused on kind of financial apps and investing. And I spoke on a panel, and the questions and the excitement, I just felt so good. So I think I will circle back to my point around Gen Z and the fact that they're making fintech and finance a topic on TikTok, and they are on Reddit and searching these things, and they are engaged. The energy and the interest is there. It's just about how the industry can garner that and support it. And I think that the regulation is good, that it will ultimately protect those consumers. Yeah. But at the same time, I hope that the people who are in maybe the places making the decisions around pausing the technology will eventually just move out and be replaced by people more open to the change. And ultimately, we might just have to wait for that to happen.
I think we have to do another episode because you just brought up the idea of the wealth transfer, which is, I don't know how we didn't talk about that, but we're going to have to do another one of these at some point. Yeah, exactly. That's what I'm saying is like the impact of that on this whole thing.
And that does go across both your world and America as well as the UK and probably globally as well.
I think it is global in terms of like I know the US stats a lot better, but I think it is global in terms of just the way that the generations have been built up, and a lot of wealth was accrued at one point, and it's about to be shifted, and it's going to be
the
really
wealth
interesting.
and the mindset that comes with the wealth as well.
Well, to your point on the TikTok thing, and I think it's a good kind of place to wrap, and I want to hear if you have anything else to say, Ian. Like, it seems like this next generation, Gen Z, and a bit of Gen Alpha, is taking ownership of their lives in a way that kind of, nothing against, maybe a boomer or something like that, but like, maybe didn't quite take that same level of interest and responsibility at every point to overgeneralize for a generation. And, the idea that you're getting financial advice off TikTok, like, is it what your financial advisor would actually, like, they're probably like, rolling their eyes. They're like, that's the worst thing I've ever heard of, but it's better than, like, it's the pension at least, right? It's auto-enrolled. It's something versus like the US 401k thing of just like, anyway. It seems like a positive. It seems like we're heading in the right direction. What do you think, Ian?
Yeah, I think we're heading in the right direction too. I think the things we've outlined here is we're not speaking the right language, and I don't think we're also mapping out the incentive for the end user properly. We're not speaking the right terms to get people excited about their future. The other thing I think is perhaps we've tried to do everything all at once. Maybe the opportunity doesn't sit with financial advice because of regulation in the UK specifically. It might do eventually, not there yet. When it comes to the mass market, my other thought is I wonder if there's a specific use case that will grab people, like a sensible use case. You look at neobanking in the UK, Monzo and Revolut broke through with foreign exchange. That was where you had it was your holiday account. Then you got familiar with it. Now it's doing a lot more. And I wonder if WealthTech needs something a bit like that. Maybe it's on pensions. Maybe it's on an investment account. I'm not fully sure. Maybe it's a saving account. But something that can start with a real use point that people really buy into and care about and then grows. That's my probably last point on that.
I love it. All right. Thank you, you two. Wonderful time. Ian, always a pleasure.
Of course.
Thank you, listeners. I'm really bad at wrapping up podcasts. That's all.
Bye.
We'll see you next week.
Bye-bye.